Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Thanks for being with us today. We're talking about the multifamily sector. Please welcome my next guest. It's Brian Murray. Brian is founder and CEO of Washington Street Properties out of Watertown, New York. Brian, thanks for joining us on Skype today.
Thanks, Michael. Glad to be here.
Well, we appreciate it. And, you know, I think a lot of times on the Commercial Real Estate Show, we talk about large projects and the nation overall and Class A projects, but there's a lot of opportunities. We just heard from Stephanie in Class B properties. There's a lot of opportunities in value add. Tell us a little bit about what you guys do there at Washington Street Properties.
You know, we started our company back in 2007. You know, we started with a 50,000 square foot office space. We are in a tertiary market, and you know, I think that's what you're sharing is really interesting. I do think there's a lot of opportunity in tertiary markets, and I actually think there's a lot of opportunity for small investors such as myself.
And tell us about some of the positives and negatives of working in a smaller market area.
Well, I think the first thing you'll find is that you can achieve some pretty fantastic returns relative to some of the larger metropolitan areas. So cap rates are substantially higher. You've got less competition, and particularly in a market like we have today, where there's a large appetite for multifamily properties nationwide, and it's harder to get some of those returns. But you can find them in markets, tertiary markets like Watertown, New York. We can go out there and find properties with 10 caps. We find a lot of opportunities for value add. And that's the niche we've made for ourselves. We've had a lot of success going out there, finding properties that maybe aren't managed particularly well or have some other upside potential, and jumping in there and turning things around.
Right, and a 10 cap property there, what kind of property is that? Is that an older property with some challenges, or is that a pretty nice asset?
We're looking at probably a Class C, Class B property. Needs some work. A lot of the apartment complexes we've acquired, these were built in the 60s, 70s, maybe some of them in the 80s. And they're C-class properties, and we step in and raise them up to B-class properties.
Okay. And what are some of the things that you're looking for when you're looking for a value-add project like that?
Well, we're looking for that upside. So a lot of times it's evident as soon as you pull into the property. You'll see trash scattered around, or just signs of lots of deferred maintenance.
Sounds like my house. I don't know.
Maybe there's some value add there.
That's right.
Yeah, you'll notice that maybe things aren't being taken care of that well. Sometimes you'll see vacancies where there shouldn't be vacancies. You'll see rents that are either too high or too low for the local market conditions. And a lot of times that's because you have an owner that's not a local owner. In many cases, it might be an institutional investor that's located far away, and that's one of the advantages of being local, being a small investor, is you're right there on top of the market conditions. You can pull in personally and check that property out, keep your eye on what's going on, and it really allows you to find those great opportunities for value add.
Yeah, those are some very good points, Brian. And we see the same thing as we sell apartments, and sometimes you can go in and look at some of these smaller properties or secondary markets, and you can see that they're not doing their leasing correctly, or it's hard to find out, well, how do you lease an apartment? Maybe they don't have a good online presence. So yeah, I think apartments offer a great opportunity because, once you get away from these Class A larger projects, the management can be more difficult and harder to find professional management. What do you do as related to management on your projects, and do you recommend that investors in these type of projects are more hands-on in the management?
Well, I think that's another aspect of these tertiary markets that we're operating in, is you don't have that luxury necessarily of having some first-class property management options right there. I also think, particularly for the small investors, that they're well served in getting in there and doing a lot of that themselves. And we took the route that we manage all of our own properties. We try to set a really high standard. And frankly, when you're just getting started and you're in those first few properties, it's hard to find somebody that's going to take care of your property the way you would as an owner. And when you've got a lot at stake like that, I want to step in, set a really high standard, and I want to be the one driving by every day, stopping in, picking up the trash, making sure everything's handled the way, we want it to be handled. And we've had a lot of success with that. So I think a lot of it's driven by your particular situation, what kind of options you have available in terms of property management. But it's a heck of a lot easier to find that good property manager and know how to manage the property manager once you've already been doing it yourself for some time.
Yeah, those are very good points, Brian. And what else are some management tips that you would share with our listeners? Like, do you test your leasing folks? What are some other management tips?
Well, I think we've got some philosophies that we try to follow. For one is we want to constantly reinvest in our properties. So we do manage our properties to a pretty high level. A lot of the success of Washington Street Properties has been based on a commitment to reinvesting back into the properties. For that reason, we haven't syndicated any deals. We try to structure our deals in a way that we can step in and not have to pull that cash flow out right away. Keep reinvesting it back in. Address the finishes. We try to find properties with good bones. Go in there as the units open up and turn. We can put the new finishes in there, spruce them up, and really take care of them. And we try to do the right thing. I mean, we always want to, help our tenants out. Treat them as people. They're not just tenants, right? They're people. So overall, we just try to set that high standard, and it comes back and 10 times over in the long run if you just try to do everything the right way. Try to treat your tenants the same way you'd want to be treated if you were living there.
Okay. And we just heard from Stephanie that the market's doing extremely well. What about in a market where you are in New York and those type of properties? What type of performance are you seeing on your assets right now?
Well, we can step in. It really depends on the specific situation. Even in a smaller market like ours, you'll find a pretty wide range. We have not purchased any properties with lower than a 9 cap, and we've stuck by that. We prefer 10 cap and above. Certain situations, major turnaround situations, we purchased property last year it's about, I guess, 16 months ago now. At a foreclosure auction, we stepped in. Now that was in a really rough situation there, but we tackled it and turned it around. We're seeing returns over 20% on that property and actually above.
Nice. Nice.
But we bid off a lot with that one. We had a lot of it to basically take a fire hose to it and clean it out. So
yeah, that's good. What's a quick short tip for our listeners before you have to leave us?
I think for those listeners who maybe are just getting started or thinking about commercial real estate, I know you've got a lot of listeners that are well established in the industry, but I just want to say, there's not to be intimidated. I think commercial real estate doesn't have to be any harder than you make it. There are some complex things out there if you choose to pursue that. But if you're willing to roll up your sleeves and do some hard work, there's some great opportunities out there. There's lots more flexibility in how you can fund a commercial real estate project when you compare it to a duplex or a smaller residential project. Right. I'd just say, go out there and go for it. That's
Brian,
right.
Thanks for joining us today.
Thank you, Michael. I appreciate it.
And I like the apartment industry. That's where I started, and it's a great business. Stay tuned. We'll have more on multifamily industry. We'll be right back.
The Commercial Real Estate Show is brought to you by Bull Realty Commercial Advisors, a great place to do business. Visit bullrealty.com. RealNex, a comprehensive and powerful suite of commercial real estate tools at an incredibly low price. Visit realnex.com. That's REALNEX. Xceligent, the resource professionals use for commercial real estate information. Visit xceligent.com. That's XCELIGENT. Commercial Search, the source to market and source available properties for sale or lease. Visit commercialsearch.com. For more information on these great companies or for additional videos, podcasts, or articles, visit CREshow.com.